gonna start kicking off the class today, and there's a lot to cover, which will be exciting. So thank you all for being here. My name is Sierra Trask. I am a small business specialist in the Columbia Economic Team and director of Keep It Local, Columbia County. And so we do this class series every month, really. The third Thursday of every month, we host business classes for businesses, asking them like, what are topics you want to learn? We present those, we find local speakers. So we're really excited to have Wauna Credit Union present today. And I have more great things to say about them soon. But today's topic is on credit ready and how strategic lending can help your business soar. So we'll dive right into that. Just a few things. If you're not aware of the Columbia County Small Business Development Center, what we do is free one-on-one confidential business advising. We can help you with your business plan, marketing plan, finding access to capital, navigating regulatory processes. Just if you're looking for a resource or CPA or tax season's coming up, we can connect you to local experts on those things too. So feel free to reach out to us anytime, or if you look up Columbia County SBDC on Google, you'll find our website page and a big button that says like, book an appointment with us. And then you can work with one of our advisors like Mark. So yes. And then my colleague Jason, he's out and about getting some reporting done, but he's our director of the center. Some housekeeping things for today too is that there's like coffee and water and burritos. The unmarked burritos are sausage. And then if you need to use the bathroom, feel free to get up anytime. And it's like the very end of the hallway here. Also, fun fact about this building, it's the county's administrative building where they have like the commissioners, the HR, legal, but on this main floor, we're actually a tenant. And so we're in that corner right back there, sorry. We're in that corner right back there, so that's our main office, and we meet with people there for our advising appointments. And then the county museum, that's why you like walk past all the war posters everywhere, is because the museum's right there. So, yes. This is the structure of the Columbia Economic Team. So Columbia CET does economic development on a countywide basis. We recruit businesses, support the businesses here. We have the SBDC, Keep It Local, Grow Greater, and we're the tourism destination management organization of the county. Those are all under the CET umbrella. Today's class is proudly sponsored by Wauna Credit Union, and they're kicking off the 2025 series. They've been a sponsor since last year. We're excited to have them sponsor again, so we really appreciate them. And I'm going to give this over to Megan.
Thank you. Good morning. How are you guys?
Great.
We have a full house. Really fun. Yeah, so for those of you that don't know me, my name is Megan Fawcett. I'm the Community Engagement Director for Wauna Credit Union, and we've been sponsoring the Munch-N-Learn series for the past year and a half, I believe. And so going into 2025, it was really a no-brainer for us to come back and work with you all. We have the opportunity a couple of times in this educational series to be the subject matter expert. And a big part of Wauna Credit Union, our mission is really to give back to our communities around financial education, be it small businesses and youth as well. I'm a part of the marketing team. And so outside of finding those opportunities to educate our communities in regards to how to be financially healthy and responsible, I also get to manage our giving dollars to the community. So we are unlike a bank in that we are local and we have a board of directors that live local, that are your neighbors, that are in business just like you. So we believe that we can pick products and services that really fit your needs, and we like to give back to our communities. And so we have 119 employees that are on staff, and that's from Forest Grove to Astoria to Claskenai, Vernonia, St. Helens. We have 7 branches. And with those 119 employees, part of my role is to try to find opportunities for them to get involved and give back to our communities. So we pay our employees 16 hours per year to, either educate in some fashion, but pick a nonprofit that they're really passionate about and give back their time. And we are excited to work with you, all of you. And how many of you were at Crooked Creek in early December for the news, beer, and holiday cheer? Yeah, we hosted a great party, and Wauna Credit Union through the Munch-N-Learn sponsorship, we also get to sponsor that event. And I think there was over 80 business owners in the room, and I think we had like 110 or so in attendance. And so we got to spend time with everyone that was there and have some really great conversations to really identify further opportunities to be able to create products that really would help you and your business thrive. And so I'm really stoked to have Pam with me here today. So, Pam Weller, has facilitated and taught a workshop last year. And that was around, how to become lendable, and she's back here today. And something that I really love about Pam is she's a small business owner as well too. And she has been in the commercial lending world for over 20 years, and is very knowledgeable. And Pam and I have our own personal connection because we both love to knit and we're wearing our knits today. But yeah, she is one of you, right? So as far as how she kind of breaks things down and how she explains this information, I think is really helpful and relevant. And so thank you, Pam, for giving us your time today. So we'll kind of just like hop into it, but I'm going to put you guys on the spot here. And that is, it would be helpful for Pam and, sharing information with you today to understand a little bit about your business. So if you could just tell me your name, what business you represent or own, and if there's something that you want to get out of today, maybe. Okay, so let's start here.
I'm Kimberly Frakes. I currently manage shield installation commercial flooring in town. I'm actually looking at starting my own business, so I'm here to gather all the knowledge to begin the process.
Dave Lawrenson, I'm the owner of Crooked Creek Brewery, and, yeah, we've been growing, we've been fortunate to be able to get cash, mostly for startup and expansion at this point, but we're growing faster than that's gonna be able to manage, so trying to prepare.
Yeah, thinking ahead, that's good.
Be able to keep growing.
Andy Mullen, I'm the owner of Three Crescents LLC. We're a mobile mechanic service for Columbia and Washington County. I'm here to get information because as things change, it's always good to know where you can get capital.
I'm Mark with SPDC. I like coming to these classes because I always doing something new. I work with a lot of small businesses, so the more I know, the better I feel, more confident that I'm advising correctly in our one confidential advising sessions. So thank you, Pam, for your time.
My name is Macy. We own Textile Cleaning in town. Yeah, just looking to see as we're growing, where we can possibly go with our growth and any kind of path that we can, so it's great.
Thank you.
I'm Katie Clam. I own a couple businesses, but I have Comfort Makers, which is in-home care agency taking care of seniors, and then Comforting Medical Supply, which is a medical supply store. And I just like to come to these to learn something, so.
I'm Dave Lambert, and I have North Creek Construction. We're a general contractor in Columbia County here. And I'm here to figure out just how to grow. I've been consistent enough that it's time to figure out how to apply the monies or change something so that I can go to the next level.
Cool. Thank you.
I'm Susan Baker with BDE Group. I work as a consultant mainly with restaurants, but other small businesses, and I love companies to try to pick up additional information on other things that I might need to be able to get clients to be able to borrow money, because we're always looking for ways to grow, and many times that takes capital, so.
Perfect. All right, Pam, the floor is yours.
And I thought, you know what, I think we're gonna get some water. Yeah. I think it's starting.
Okay, yeah. Sierra, do you mind if I shut the door just so there's not the breeze that's coming through here?
Yeah.
Okay.
Yeah, regularly.
Well, good morning. Thank you for everybody that's here today. I recognize a few faces. They look familiar, so I'll kind of change some of the things up a little bit. Hope you can gather a little bit. You know, Megan already introduced me, but just a little bit more about me. I do live in Vernonia, so I've lived there for a long time. And if I tell you how long, then you're gonna go, yeah. But I've been there for about 40 years, and I've supported my husband in his business for about that long too. So, kind of understand that as a business owner, you wear a lot of different hats. You know, you do the actual process of whatever it is that you do, whether it's manufacturing, building, retail, what have you. And then you come home and you worry about who's going to do the, you know, your employees, the HR, what the state requires of you. So you got a lot of hats that you wear. So this morning I thought I'd talk a little bit about, you know, maybe some of you already know this information, but I wasn't sure. You know, when it comes to lending, you know, one of the things that your lender is gonna look at is your credit report. And I wasn't sure how many of you knew what makes up your credit report. So I was gonna spend a little bit of time on that. So that if by chance, you know, improvement needs to be made before you go and ask for a loan, you'll kind of have an idea of some of those things. So let's see. Okay, so we're going to talk about 5 factors that make up your credit score. And actually during this time, if you have questions, please feel just, you know, speak out and ask questions, because maybe you have a specific instance that you're wondering about. So there's 5 factors that make up, and they all are weighted a little differently. So 35% of your score comes from your payment history. So, you know, FICO was made up, you know, quite some time ago. Lending institutions didn't make it up, but this is how those bureaus kind of weight. So when we talk about your payment history, you know, they're looking at public records. They're looking at, you know, collections, those show up on there. And they're especially looking at late payments. So that makes up 35%. So this history is pretty important. I've had some people, even recently, somebody just called me the other day and they were concerned that they were late on a payment, and does that affect my credit score? Well, the thing is, it doesn't affect your score until you're 30 days late. So the key is, you know, yeah, if you're a little late, I mean, sometimes maybe from a financial institution or a lender, you got a late payment and there's a fee involved. Well, that doesn't mean that's reporting to the bureau. It just means, hey, you know, maybe you're 10 days, 15 days late and they're gonna charge you a little bit. But so 30 days is kind of what you want to keep in mind. You know, collections are kind of interesting because sometimes you never know when they're going to show up on your credit score. But if you know, have a recent collection and you either pay it off or know it's gone, I would be asking that collection agency for them to delete that from your report. And sometimes, and I know too, you know, you can get your free credit report, you know, once a year. If you find anything on there that you can dispute that. I mean, I go to the people and say, hey, you need to fix this. So, and that will help. So, you know, some of the things that really affect that number, you know, bankruptcies, foreclosures, things like that. But, you know, probably what we see more often is just a few late pays here and there. So that's something to keep in mind. So another part, another one of 5, 30% is the amount that you owe, and we're talking revolving credit. So maybe I'll ask you this morning, what do you think revolving credit is? What could that be?
Credit cards.
Yep, credit cards. Anything else that you can think of?
Lines of credit.
Yeah, lines of credit, which includes home equity lines of credit. So the thing to kind of, you know, keep in mind is a lot of times they do report as revolving credit.
Business line of credit.
That, you know, that's a really good point that you bring up, a business line of credit. It may or it may not. So I'm going to talk about our financial institution because I don't know what others do. But for us, if a business has a line of credit, now when we do those loans, that we require the owners to be guarantors. But maybe kind of a technical term, they're not full borrowers. So in our system, we do not report those business lines of credit under your personal credit. The only time we would is if you're a sole proprietor. But if you're an LLC, an S corp, a C corp, in the way we do things, we don't report. Any questions on that?
A little confusing. That's only that one specific line item, is that correct?
Well,
Or other personal reflects the business, right? Is that right?
so, okay, I wanna make sure I understand what you're asking. So, yeah, on that line item, it's not reported on your personal,
Right.
but I would say our other commercial loans are the same. So on real estate loans, on what have you, if it's in a business name and you're only the guarantor, we won't report it on the personal. But why we look at the personal, if you're getting a business loan, is, we're looking at the character, how you pay, and those type of things. Does that kind of answer what your question was?
So if I want a business line of credit, you're gonna look at my personal line to evaluate the business line of credit.
Well, if you have a personal line, we're gonna look at every
My personal
credit report.
credit report.
Yes,
Right,
yes,
Right.
we are gonna look at that.
right.
We look at a lot of different things, and as we get a little further, I'll kind of mention that, but we're gonna look at the credit report. So that's why, like I said, it's important to have that credit report. What we see is a reflection, if this is what you're doing in your personal side, it could be a reflection on the business. So,
Question.
yeah,
So what if you have a strong, and I'm just throwing out hypothetical.
Yeah.
There's strong business credit. And your business credit report shows that you're making all your payments. And you show good cash flow to be able to borrow and make your payments, but your personal credit of one of the partners is really bad. But personal credit of another partner on a corporation is not as good.
so that's a very good question. So, another comment I will make, not all financial institutions, I can add, once again, can't speak for others, but at Wauna, I do not run a business credit report specifically on a business. And the reason for that is a lot of times organizations, businesses, they're not reporting to any type of bureau. So the information you get back is not really what you want. So we look at financials and things like that. But yes, we've had many times that maybe you have a business and you've got 2 or 3 owners or 4 or 5 owners, and somebody's really strong and somebody's really weak. Yeah, that is a little tricky. Sometimes what we look at, if you have a business owner that's a minor owner, so this is a small percentage, 5–10%, may not be that big a deal. But if you're 50–50, some are good, some are bad, it's kind of it's an underwriting decision, and we have to look at the rest of the whole picture. We're gonna look at the business, all the personals, and another part of it is their collateral. That's gonna make a big difference. If things are weak on an owner and you're asking for unsecured, then that's gonna make us a little bit more concerned about that. So all depends on percentage of ownership and what the rest of the picture looks like.
So I don't wanna jump ahead on your notes. But in my example, my personal has suffered greatly, but my business, I don't have any credit. I pay everything for cash. So,
Okay.
so then you're gonna, if I need help in getting business dollars loan, we're gonna look at the personal, but we're also gonna take into fact that the business is bringing in cash.
So what we're gonna look at your financials for that.
Mhm,
We can
right.
see that. We can see it on your tax returns.
Mhm.
That's the kind of things that we wanna see. So yeah, if you pay cash in the business, that's, at least from our perspective, that's okay. We're just gonna hopefully see that cash flow on the tax return.
Yeah.
So, that,
Again, probably jumping ahead. So in this situation, would like an SBA 7A be a little simpler to possibly
that could be, I will tell you,
borrow from versus a
The only,
Lender.
SBA loans that we've done in the past were those PPP loans, and they were just like a different animal.
Okay.
So if somebody wants an SBA loan, they probably need to look for that type of lender. And I've heard there's a lot of hoops to jump through, but I don't know, because I'm not an expert in that. But it is something that could be looked at. So. Okay, so revolving credit, let me see if I covered everything I need to on that. Okay, one thing I was gonna mention, so when we're looking at this 30%, the amount owed, we're looking at what we call capacity. So like if you have on your personal, if you have credit cards, lines or whatever, and you've got $10,000 available. If you have used 9,000 of it, that means you've got a really small capacity. And you only got your $1,000 left, that's gonna affect your credit score. It's gonna draw it down a little bit. So what a key would be, sometimes, people have a lot of credit card debt, but they work to get that taken care of. Hey, I'm getting it under control. I don't want these cards anymore. My suggestion is if you're tempted, cut the cards up, throw them away, shred them. But don't close the account, because one of the next things talks about the history, the length of time. So I wouldn't close it. And because too, is if you close it, if it's a credit card, you're reducing your capacity. So, say you got a couple cards at, $5,000 a piece, you close one or two, then all of a sudden you've got less capacity. It could affect your score. I was actually looking at some notes yesterday and I thought, oh, those are good notes. I should mention that because it was been a while since I looked at it. But something to think about, you could use like one credit card. What I try and do for myself personally, I use one card and I try and pay it off every single month. If you by chance pay it off, like my notes actually were referring to a mortgage, because if you're going to get a regular home mortgage, they're really looking at that credit score and they're going to look at it more than once. So if you pay it off monthly, maybe you pay it off a little bit ahead of time so that your statement doesn't show a large balance. So like I said, if you got 10,000 available, you use 5,000 or 6,000 every month, but you pay it off. I mean, it's paid off, but the time when they pull it, is it going to show you have a balance or not? So anyway, just something to think about. Any other questions on the revolving side?
I just want to make a comment. When you talked about length of credit and all that, personal experience, a little bit over 25 years ago when my husband passed, I thought, oh, I'm just going to get rid of my credit cards. I don't owe anybody any money. Shut all my credit cards down. I had $40,000 limits on all my credit cards. Tried to borrow money 10 years later, could not borrow any money because I had paid cash for years, did not think of the ramifications because I'm like, just paying cash for everything. I've had credit for years. I'd shut them all down. So it's just personal experience.
Yeah.
Don't do that.
Yeah, I mean, you thought you were doing the right thing.
Yeah, I thought, oh, I
And
don't wanna,
that's-
my husband's passed, I don't wanna go out on a spending spree accidentally and go, oh geez, I got all this money, I'm gonna go travel, I'm gonna this, I'm gonna that.
Yeah, I've heard old school thoughts, like from my grandfather, right? They were kind of like taught me something, it was like, no credit is good credit. And it's like,
Yeah.
no, not anymore. It's not like that.
Yeah. So. So as I mentioned before, the length of credit, like how long you've had it, that. Kind of as I already mentioned, I wouldn't close the account. Some that you've had for a long time, they can show that they've been reporting, but it's good reporting, that's great. Talk about that. New credit, this is something that you may not know also. 10% is new credit. Now it's 10%, so it's not a huge amount. But the thing is when we go to look at that credit report, we're looking kind of like with a fine tooth comb because it really shows us, how you pay for things. And so we can see on there if you're opening up new credit cards. I mean, you can see how long, how many, what they call the reports is they call them trade lines. And so you can see, oh, look at, they've only had that for 2 months, or they've had this for, a year. And if we see a lot of cards being opened and then balances being put on it, that's a real red flag. So, so we're, like I said, we're gonna look at that. Another part of the credit report actually tracks your inquiries. So if you're trying to get a loan or what have you, it shows, so I'm not exactly sure. It's either 12 months, 24 months for those inquiries. And so if we go and we see that there's like a dozen or more, we're going, okay, what's going on? Are they asking for credit and they can't get it somewhere else? That might be an issue. But with that being said, we know that there are people that run your credit that aren't financial institutions. So what should be happening, what we call a soft pull, and it shouldn't impact your credit score. And that would be like an insurance, inquiries, they do that now. Maybe it's medical. Sometimes they might pull credit counseling, employees inquiries. If you're applying for a job, some places may look at your credit. I'm not sure how much they do that anymore, but anyway, that shouldn't affect you. But something just to keep in mind that will affect your score a little bit. Any questions about that? And the last, is the type of credit. So it's kind of a mix. Does everything I have on my credit report revolving? That's not, the best, but you kind of like maybe some installments, what have you. I know when people are first starting out, young people, and they want to build a credit score, maybe they can get a credit card, but you just need to be a little careful with that. But if you have a small installment loan, that's great, because that's going to start reporting, pay it on a regular basis. And that might be something to think about. Let's just say you got a home equity line of credit, you were doing some remodeling or what have you, and you used quite a bit of it. I don't know, maybe 50, 75,000 that you use. If you leave it on that home equity line of credit, it's gonna report as revolving. But maybe at some point in time you decide, hey, I wanna change that to an installment loan. I don't want it revolving anymore. I'm gonna take a chunk of that and I'm gonna move it over to a fixed rate loan. It's no longer variable. So that would take it from the revolving bucket and put it under an installment loan. So that might be handy to think about. So I think that's about all I have in regards to the credit score. Does anybody got any other questions about that? Well, okay, let me ask you guys a question. So have you guys heard any of this before? Some of it familiar? Okay. So, let's see what the
I have a
next slide
question
is.
for you.
Yes.
So say, someone that's in this room today would like to understand their credit better.
Mhm.
Could they come into Wauna Credit Union and have their credit pulled? And would somebody sit down and talk to them?
Yes, they would. Anybody that has, well, when we're, opening a membership, we can do that for you. Or, if you're applying, you can come in and have what we call a credit score analysis, even if you are not ready to get a loan right then. I know some of you guys are preparing for that. You could do it now. If we pull your credit score, it will be a hit. But what happens is it usually hits your score as an inquiry for a while, and then it's not that much, but it might be helpful to have that information. Or, so to be honest, because I worked for Wauna for so long, I haven't pulled my free credit report because, I've done different things. I kind of know where it's at. If you have a free credit report and you want to bring it in, we can take a look at that to see if we can, make some sense of it.
What do you mean by a free credit report?
So, that's a good question, Megan. I know there are different places that you can get a free credit report every year. But you're gonna have to check into it because I don't know the names. I know some people do Credit Karma, different things like that. They may just give you your score. Probably something I need to look into.
And then there's like the Equifax.
Yeah.
Like you go on the Equifax to get your.
A lot of your personal credit
Yeah.
cards give it to you now too as well.
You know, that's a good point, because I've gone to all three bureaus and I've actually frozen my credit. But I didn't look into it to see how much information they've given me. So,
Yeah, you can get a free one from each one of them once a year.
Like a soft pull and a hard pull, right? Like, as far as when you looked into your credit score, right? There are ones that actually don't ding your credit or show up as an inquiry. And so that is another kind of facet of this as well too. But I think to Pam's point, like, if you're not looking at taking out a loan or doing a whole bunch of things and you wanna get your credit checked yearly, that's not going to impact you a great deal. And if, like, today's point, he's looking ahead and he's got some future plans, it would probably behoove you to sit down with somebody that understands credit well to kind of strategize, right? What you might need to do to restructure some things, like how you were talking about the revolving versus the installment. Having somebody that's really educated, I think would be really helpful, because there's strategies involved with this, right? How we move money around to where, how to impact your overall credit
right,
score.
and we can see kind of in, you know, as soon as we run, we can see, hey, okay, these look good, oh, there's the weakness, and share that information.
Just be aware that there are a couple out there that are free, like free annual reports and stuff like that, that the government requires that you have access to. But not all of them will give you the score, they'll give you the open trade lines, and they'll tell you how you're doing on that particular trade line, but they don't necessarily give you what your current score is.
Yeah,
Sometimes you're kind of chasing them right down the rabbit hole on some of those to try to avoid the inquiry.
yeah.
So to give it some time, we're about 20 minutes.
Okay, perfect. 20 minutes left, okay, good, well, we'll move along. Cause I was looking for that, I was like, what was off? So when we talk about differentiating your debts between personal and business, you know, if you are a newer business, this may affect you a little bit more. But if you can make a separation between the two, that's a good thing. Because it's bookkeeping, it's tracking. You know, sometimes if you're a new business, you may have to use your personal credit in order to get started. So maybe, hey, I'm going and I want a business credit card, but I'm brand new, I can't qualify. If I can get a personal card, my suggestion is maybe get an extra personal card, but keep it separate. That's the only thing you're gonna use for it is business. So when it comes tax time, oh, okay, this is strictly business. I don't have to worry about intermixing those items. Another thing, when you're talking about business debt versus personal, I mean, if you have a CPA, accountant may be able to give you good information, but the CPA is probably, you know, the expert, the subject matter expert is, how do I structure that loan? Is it good to put it in my personal name? Is it good to put it in my business name? Can I write it off? I know in the past, and so I'm gonna make this comment, I'm not a CPA, I have no idea the rules right now, but in the past, years ago, we actually, our business was gonna do a loan. And we took the money from our personal money and we loaned it to the business, so we were able to get some type of write-off and then it paid us back. But I'm just making that as an example, but, you know, talk to a CPA because there may be a good way to structure it. I kind of already talked a little bit about guarantors. If you're a business owner, you know, we are going to expect a personal guarantee. So just to keep that in mind, we'll always ask for what we call a business debt schedule. So, and when we're talking about a business debt schedule, it's only the business. So the personal, we can get that information from the credit report. But the business, we need to know, and we're not talking about like monthly accounts that you use and then pay off. I would think in the restaurant business, you have a lot of vendors, maybe you, you know, get product from every single month, but you pay them off. That's not what we're talking about. We're talking about specifically loans. So I'm gonna zip through this because I want to make sure we get to the end when we're talking about a loan request. And that is, when we talk about 3 C's of credit, I think, some of you may have heard this from me before, so I'll try not to be too elaborate, but one of them is capacity. Talked a little bit about that already. Capacity on your credit score is, it measures your ability to repay. And can they generate enough cash flow? So we see that on the personal, but we also see that through tax returns. So on the business, we're gonna be looking at the business. Bottom line is, was there any net income? And I know, when it comes to taxes, as a business owner, you work really hard all year long, and come tax time, it's not fun to take out and pay those taxes. However, you need to keep in mind is if you're not showing some profit when it comes to getting a loan, it can be more difficult. One thing to throw in there is sometimes, on a tax return, maybe you bought a piece of equipment, maybe you purchased a home, a building or what have you, and you may have depreciation on your tax return, which is basically a paper loss, but we will add that back in. So we will always add that back in, we'll add back in the interest. So those are a couple of things that are included there. We're also gonna look at capital. So one thing we're gonna ask for is a personal financial statement. And I know sometimes I have had less trouble getting those lately than I did in the past, but I know sometimes it's not real fun to do. But the thing is, what we're looking at is, business loans are probably the riskiest loans that a lender can make. So we want to make sure, hey, especially as a credit union, we're owned by the membership. We need to, when we lend money, have the expectation that it's going to be returned. So let's just say something happens. COVID for restaurants, or, other things that, the economy's been really tough. I don't know. Did you say you were in construction?
Yes,
How are things going for you?
well, it's slow this week.
Yes.
I'm here.
How about the last year?
I was fine, it was busy.
Okay, so, well, that's
It
good.
was pretty rough for us last year.
Was it?
It was very odd, when election years are always a very odd.
Everybody's waiting.
Yes.
What was
Nobody wants
the
to
industry?
Flooring,
Say it again?
flooring.
Oh, flooring, yeah.
So because of that, businesses have ups and downs, and we want to know, hey, are there personal assets? Is there something to back this up in case, we don't make it, we don't break even, or we have to take out our savings or what have you. As far as conditions, well, kind of already mentioned that a little bit, what's the economy doing? What's happening in the industry? I would say during COVID, if a restaurant came to us and asked for a loan, unsecured loan, that would have been pretty difficult because you knew, they couldn't be open for business, or it was, maybe it's takeout or what have you. So, and the thing too is, can they adapt? Sorry to keep going back to restaurants, but as I think about it, they try to have some outside seating so that they can make things going, but we know a lot didn't make it, so.
Pam, what would be the difference between, getting a unsecured and secured loan? Not necessarily by definition, but why would I, as somebody needing the funds, look to do either one of those?
To get an unsecured.
Yeah, how would I make a deciding factor of whether I'm gonna do a unsecured or secured loan?
Okay, well, number one, we're thinking of collateral, so we need that for the secured, but that's a very good question. So an unsecured, if we're looking at a line of credit, when you come to us, you're telling us why you need the funds. And sometimes maybe, you got accounts receivable that are 60, 90 days out. You've got things that you need to pay. So you use the line of credit. And then when your money comes in, you pay it back. So when we give that loan, we're looking to, we'll do it for maybe 24, 36 months. And then we're going to look at your history. And we're going to say, hey, did they use it as we were thinking, as they said they're going to use it, pay it down, use it, pay it down. Because an unsecured loan is gonna have the highest interest rate, and for a lender, that's the riskiest thing that we can lend on. And if we see, hey, they've got a $50,000 line of credit and it's maxed out every month and they're not paying it down, then that's a concern for us. And we might look to say, okay, let's term that out. And when we term it out, we're gonna take them out of that loan. We're gonna put it into a fixed rate loan for so many months that can get paid off. So I would say operations, if you, one thing to think about, you know, we've had new businesses that come and say, hey, I'm starting a new business, I need startup funds. Well, that's not really, startups is very difficult for us to lend on. Sometimes it would switch over to the personal side. Hey, do you have anything on the personal side that we can give you funds for?
That answers what.
Yeah. So, but the main thing is we were on those lines, yeah, use it, pay it down, use it, pay it down. But, like I said, I've had people, you know, sometimes you do need it for payroll. We have had people call us and say, hey, I need a line of credit, I can't make my payroll. I would almost prefer that request came before you needed to pay somebody in 2 or 3 days. Because that talks to me, says to me a little bit of desperation and geez, how well are you doing? But if you think ahead, you know, put it in place, maybe you don't use it for a while, no problem. Collateral, talked a little bit about that. And that is, you know, when we're talking about collateral, I mean, if you have it, that's best, at least for a lender, that's best type of loan we can have, because we know that if something happens, you know, there is collateral to fall back on. Commercial real estate, equipment, vehicles, inventory, what time is it? Oh, okay, so, help secure the debt, and as I mentioned too, this is going to get you a rate that's a little bit lower. It's usually fixed, a little bit lower than if you got an unsecured line of credit or a credit card. Character, you know, we'll talk a little bit about that, personal integrity of the business owners. And Susan, if I go back to one of your first questions, if you have owners, some are weak, some are really strong. This is what we're talking about, integrity of the owners. So, and you know, you're dealing with underwriters who have maybe approved or denied loans over the years. And if they've had maybe a loan that's gone bad and the scenario is similar to what is being brought to them, they're gun shy and they're not going to want to do it again. So, you know, if you've got business owners, you know, several different ones, you know, you can have the discussion as owners of the business, but it's difficult and it's touchy. I gave a loan to a group of people one time. It was 2 couples and they wanted to buy a food cart. Well, one set of owners was great, the other one wasn't so great. The good thing about it that I was able to approve, number one, I had collateral. Number 2 is all those 4 people were still working and had W-2 income. So it was like, okay, I'll take the risk, and they were fine, they're totally fine. But if you have a weakness and you don't have any secure income, then it might look a little different. So, okay, so when we talk a little bit about what we're gonna be looking for, you know, what we're gonna ask for, you know, how long have you been in business? You know, what we would like to see is we would like to see you that you've been in business for a couple of years. Because then we can start to see that cash flow. There is really no other way that we can tell how you're doing and how you're paying your bills except for tax returns. On occasion, so like end of last year, somebody comes and asks for a loan. Well, we've got 2023 taxes, so we can see what they did in 23. We can't see what they did in 24. So we'll a lot of times ask for a profit and loss. Well, that's really great, but, and we kind of, it gives us an indication, but we won't make a decision on that. I don't know if anybody has ever taken Go ahead.
So I have a quick question.
Yeah.
I know I've had underwriters be okay when we've had a CPA firm turning the P and Ls over, which are gonna be used for tax returns. Are you guys okay with that? Because it's not ready to
I'm gonna
be
give
tax
you
return
A
yet.
great answer. Well, it depends.
Okay, thank you.
In most cases, what we use for those P and Ls is a snapshot that says, are you making, what's your bottom line? Because I don't know if anybody's ever done this, but if you take a profit and loss and you compare it to your tax returns, it's not the same numbers. It might be the same gross income, but the bottom line changes. So that's one reason we don't use those. I mean, as a snapshot, but that's kind of about it. And I get what you're saying, because, I mean, I have QuickBooks at home. Am I entering things correctly? I think that's probably where you're getting at.
Yeah, with the
know.
CPA doing it and also having a balance sheet and an income statement
Yeah.
attached to it, so
Yeah.
that.
Yeah, and QuickBooks will give you a balance sheet by just clicking a couple buttons, but do you enter the information correctly? I don't know, my CPA, he's the one that structured it, so,
Yeah.
but anyway. So we like to see that. As I mentioned, 20% of new businesses fail within the first couple of years, and then it kind of goes up from there. Yeah,
They don't have 2 years of tax returns because they're only been 1 year. Will you work on projections for the following year, what they project for business?
you mean if they've been in business for less than 2 years?
Because they don't have 2 years of tax
Yeah.
returns, but they project their business out.
I would say, not usually. It really depends. It depends on how much other information you have. Because projections, so whenever anybody comes to us for a loan, they're gonna buy, let's say, an apartment building. Brand new apartment building for them. We are not gonna take future income in order to approve the loan. Is that you have to prove before you buy that piece of equipment, that property that's gonna increase your income, you have to prove that you can make the payment before that. And in most cases, people can, but if they can't, yeah. So,
And I'd say that's pretty standard in the industry, it's like this, not just one credit union, we see
Yeah.
2 years all the time do this start. And only small like the credit for like startups, so.
Yeah.
That first 2 years is like tough, so.
So I know I've projected and done with banks before, we have 2 years of tax returns, or we have 2 years in business, we have the first year tax return, we have a P&L, and then I do 5 years of projections based on the 2 years. And historically, this is what you can see, and we've got projections, and I've had banks accept that, but you guys don't work that way, or?
well, it
Just
depends
out
on
of
how
curiosity.
close, it probably depends on what the first 2 years are.
Okay.
You know, if the first 2 years look good and those projections look good, okay, great. But if those first 2 years don't look good.
Right.
And then, oh, now we're gonna get better, probably not.
Okay.
And like I said, like, we are a credit union, we do quite a bit of lending to small businesses, but that's kind of our niche. But also, we need to protect the credit unions in, you know, finances and the members' deposits, so. So when we look at what type of business, you know, are you gonna be a sole prop, LLC, corporation? You know, that would be something you'd want to check into. What's the best one for you guys? I'm not here to, you know, suggest, but it's something that you need to think about. Also, who's gonna own it? You know, what's the percentage of ownership? Because I will tell you, when it comes to lending, you know, anybody with 25% or more of an ownership, we're gonna really look at their income and taxes and what have you. If you got a minority owner, 5-10%, we may not be asking for that. So as you're trying to structure something, you might think about that. Already mentioned that the owners are required to be guarantors, and kind of already mentioned that about the percentage of ownership. And the more businesses have more owners, is more challenging to get all the information you need. So what are we gonna need? You know, we are gonna look, so if you are a business, registered in the state of Oregon, we're gonna make sure that that's current. I think in the past that the state used to send out reminders to renew your business name. And I don't know if they do that anymore, so, well,
We do, yeah.
I just got mine.
did you? Okay,
Yeah.
they want the money. Anyway, we'll make sure that's, up to date. We'll ask for an application, of course, your taxes, owners, business and personal, debt schedule, personal financial statement. That's pretty common. This was just a copy of a personal financial statement. So you guys familiar with filling those out? Is it, got any questions about that? Okay. The more information we have, my parents were, obviously older than me, old school, and they didn't want to tell anybody anything. So if they would share any information with an investment person, you name it, they're not gonna give you all of it. But when you're asking for a business loan, it is helpful to know, what's available. I didn't realize I had this many slides, so I'll try. So when we take that, information, when we take your taxes, what have you, we look for, what the cash flow is. And so one thing that we do is, we look at the personal, take a snapshot of that. We look at the business, so how are you able to pay your personal debts? How are you able to pay the business debts? And then we'll put them together for a global cash flow. So a lot of the small businesses, sometimes we need to do that because maybe, the personal is doing just fine and the business had kind of a down year. It was a one-off or what have you, but when you put the global, they can make it. So that's something that we kind of take a look at.
And that's even going forward. So it's always looked at combined, 10 years in business, personal is, so you're always looking at those? Is that
Yes,
correct?
yes.
Oh, yeah.
And we ask for 2 or 3 years, well, we'll say 3 years on a real estate loan,
Mhm.
and we'll kind of do a snapshot back. So obviously, the most recent year is the most important. But, hey, we're now doing okay, but there's losses the 2 previous years, we might ask some more questions. Because we want to make sure that it's going in a good direction.
Yeah, I was always under the assumption that they were looked at differently. So that's why I kept everything clean on the business side for the 2 years, I'm 3 years in business, right?
Yeah.
And then the personal suffered. So I was like, oh, learning today, I'm like, oh, well, great.
Yeah, well, and that's what we look at for small businesses. I
Right.
mean, I don't know other commercial banks
Sure,
look differently, but yeah, so.
I think it's also in the industry, personal guarantee, it's just pretty standard.
Oh, yeah.
Like
Okay.
that's why it makes sense.
Right.
Sure.
And, I've had a few people say, hey, I don't wanna be a guarantor, and it's like, okay, well, I'm sorry, I can't loan to your business.
Sure.
That's a red flag. If you as a business owner, you don't wanna stand behind your own business, then that's kind of telling. So remember, when we have collateral, we're gonna have to get your insurance, you're gonna be needed to be listed as a lien holder on that, so we're gonna be asking that. We don't do too many loans on inventory. The thing is inventory is very hard. I mean, it's collateral, but I mean, if we're loaning to a hardware store, are we gonna go take back their nails or wood or what have you? So in that case, our loan to value, we're only gonna do maybe 50% of that. Oh, okay, so the loan request, this is the one I wanted to get to, and I know we're about right out of time, but most important thing, and you guys are here for a reason, is start building that relationship ahead of time. Start building, if you think you wanna buy some real estate in a couple of years, come talk to us now. Maybe we can look at what you have now, forecast, we can, okay, how much or do you think you're gonna need? We can run some scenarios with, a payment amount, so you would know that, so that you can compare. Business summary, so business summary could be written, but it can also be a conversation, and that is, tell us what your plans are, what your business is, what you're gonna use the funds for, and the more specific you can be, the better. Because if it's vague, sometimes we have to dig around and try and figure out, what exactly are we doing? And so that's helpful. Financial documents, I already mentioned kind of what we would require. And I would be sure is be prepared to give them all to us. I will tell you, somebody asked me the other day, do you really need my personal financial statement? And I said, yes, I do, because we are also like other financial institutions. We have audits and we have examiners, and more than once they've said to me, okay, you need this personal financial statement. Before I I hate trying to dig that out of somebody if it's a renewal or what have you, but be prepared to give that. One thing I want to mention real quick, if you do a real estate loan, well, I would say any loan over 250,000, 250, 500,000, there's a good chance we're going to ask you for financials every year. Okay, and it's just that we, because of our auditors, examiners, we have to review those files. Now, if you had a bad year, does that mean we're going to call your loan and say you have to pay it all off? Now, chances are probably not. You know, what we're looking at is, I'm looking at, are you repaying every month? Oh, great, that's a good thing. You know, we'll look at your credit again, but just keep that in mind. A lot of people who buy lots of real estate, they understand that and just, you know, ship them to us every year. But something to keep in mind, you know, have a plan for the use of what you're gonna do with the funds. And, you know, be open to consider, you know, maybe we have a different option. If we look at, you know, you're saying, this is what I want, but yet we can't approve exactly what you want. We might make a suggestion, hey, what about this? Will this work for you? I mean, because as a credit union, you know, we're people helping people, and that's what we want to do. But we also don't want you to get in a position where it's going to be hard for you to repay and difficult for you too. So we might, you know, have some suggestions. So I zoomed through that, the last part, but did you guys have any other questions?
So I was curious, because like you can refinance like a home loan, you can refinance like a car loan. Is that something that in business loans, if you have like a longer term loan that they would look at doing, like, I'm just curious.
To refinance, so like, are you saying that you already have?
Yeah, like if you already have a loan, because like, I know you can like refinance your home loan, you can refinance a car loan, can you refinance like a business loan?
Oh, yeah, I mean, real estate loans, we do that, so real estate all the time, we can refinance, equipment or vehicles, whatever, you know, we'll just, at that time, kind of look at the value and see, because sometimes people, oh, hey, I've got, some real estate, it's owned free and clear, and I want to take some cash out on it. Or maybe, hey, I need to buy something, maybe I need to buy inventory, but I don't want an inventory loan, but I got this vehicle that I can give you as collateral. Yeah, we'll look at something like that. So anybody else? I appreciate your questions all through and appreciate you guys being here today. So I'll turn it back over to Sarah.
Yeah. Really, there's a wealth of knowledge we really appreciate and all the experience that she's brought. So thank you. Perfect. I just have a quick few things to fly through. So our next class, Martha's actually going to be leading it. We're going to be going through business plans. So either if you have never made a business plan, this is a great class, or if you do have a business plan, you haven't updated it any time recently, we'll be going through what goes into an effective and successful business plan. And yes, it is very important to have one, so please do. So that'll be February 20th. Again, we do these classes every Thursday. And then our options will be SCAPU, Step Zoom, or Rainier. And you can just RSVP on our Eventbrite page. We always put our classes in the same spot. And then we have a survey out right now. You have the QR codes in front of you. We want to ask you like what topics interest you the most. And so we have like 30 ideas. And when we go to the drawing table, when we start thinking about what we could do for classes, it's kind of like overwhelming. So we figured the best thing to do would be to ask the business owners yourselves, what are you most interested in? So if you get a chance, it takes like 3 minutes, maybe up to 5, and you could just click through the options that interest you, write any others if we didn't think of something. And then we have some other program ideas we'd love to gauge from you. And then If you ever have questions, Jason and I's emails up there, Mark's right there too, if you want to corner him. And feel free to reach out to us if you ever want to do, free one-on-one confidential business advising. Thank you so much for making it out.
Yeah.
Thank you.
And take burritos and coffee and all that out.